Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the euro currency. So recently euro shows a bit tricky action, not only the euro but other financial markets, gold market and other currencies as well, just because of reaction on the gross domestic product release on Friday. So actually it was really very good numbers for United States economy. It's 4.1%. It's mostly according to expectation, and it's really very high levels that right now suggest that maybe we will get the result by the end of this year of the 3% of the gross domestic product increasing. So that's very good for United States. And recent bit mixed reaction on this event mostly stands due to some concerns, some warnings that investors have in relation to tariff spiking that stands right now between the European Union and the United States, and they thought that maybe this could be make an impact on United States dollar and euro balance force between these currencies. But guys, actually I think that is some kind of the emotional reaction, because if you'll take a look at the fundamental background, you'll see that this United States dollar position right now stands very solid. So if you will check the Fed tool by the Chicago Mercantile Exchange that shows the probabilities of rate changes by the Fed, you'll see that since our last discussion that we have a couple of weeks ago on this subject, the probabilities of rate increase in September and December have increased for 15%. So everything goes as it should, and really United States dollar position looks solid. That's why we think that it's a reaction that we see on the euro currency right now, mostly temporal and a bit emotional. So currently, guys, overall situation on the short-term perspective looks bearish for the euro currency. Besides the European Central Bank meeting that we've got on 2 weeks ago, this also just shows that European Central Bank just followed to the Fed and the United States. They did not lead the process. They are following to the process. So they take the second stage, taking the back seat in balance between the Fed policy and European Central Bank policy. And actually, we have come to conclusion that rate could be changed in Europe only in the second half of 2019. So this makes euro to stand in a bit weaker position in relation to the United States dollar. So in a shorter term perspective, in the daily intraday chart, guys, we think that the situation right now stands bearish, just to the patterns that we've got in the last week. So recall, last weekend we discussed this grabber, and we said that this is the weak type of the grabber, and thought that maybe it will be vanished and destroyed. But in reality, you can see that two bullish grabbers have been vanished by the Thursday action. On Thursday, in the company to this grabber, we've got the reversal session, bearish reversal session with the tail closing below the lows of the previous session. It means that overall sentiment stands mostly bearish, and as I said in the previous video, that reversal sessions very rare and just occasionally, immediately at the moment. So usually they have some continuation. Also, guys, if you'll take a look at a bit larger perspective, you can see that since this plunge down, market stands in the range of this plunge, in the range of this drop, this big candle. That definitely doesn't look like the bullish reversal. It definitely has no signs of thrust, and it's mostly the consolidation. It makes me think that we probably should get another leg down here, and that's why right now we're turning back to discussion of the possible butterfly. So I have planned here the left wing of the butterfly, that could become the right wing of the butterfly, and the potential of this butterfly is the same, 114.50 major support on the weekly chart. By the way, it hasn't been tested yet. But the major detail, guys, on last week on the weekly chart, if you will read our weekly report, you will see it. we've got bearish grabber on the weekly. And bearish grabber on the weekly suggests the taking out of these lows. So overall picture right now doesn't look bullish, and situation could change only if market will move above this top. If market will show the upward direction back to the 1750 tops, return it back up here above this top. So in this case, situation could change. Talking on a bit larger perspective, the further direction, guys, will depend on the breakout of this range, of this candle. So downward breakout will mean that market will fall lower to our 1450 target. Upward breakout here could mean that indeed market could fall over the acceleration to the 120. But currently, technical picture looks mostly bearish. On the intraday chart, guys, I think that we could keep an eye on this possible pattern. So we could see that as market stands at the major support. By the way, here we haven't got our hourly double repo that we have discussed in video, because, guys, in this candle, market hasn't closed above the 3x3. While we have, when we just have started to talk about the double repo, market will stand here, and it was seemed that market could close and give the double repo. But by the end of this period, this market dropped and closed below the 3x3 again, and no double repo has been formed here. You can see this drop further, and here's reaction on gross domestic product release. So here, guys, you could recognize the kind of the hand shoulder shape this market is forming. So if it will keep the harmony on these bottoms, we could count on some ABCD retracement, maybe somewhere to the area of the 1680, maybe to 50% level of this recent drop. And it's a combination of the weekly and monthly pivots. So just watch where the C point will be to estimate the precise target of this possible ABCD retracement. If this will happen, that will be the chance to go short, because we could get the guardian coupon to sell. And overall bearish setup will be valid until market stands below this top. Only if market will move higher and taking out of this top, the situation could change. But it doesn't mean that you need to place the stop orders right above this area. So just watch how ABCD pattern will develop, if of course it will be formed. If it will be gradual, you could, for example, place stop somewhere above this area. If it will be very fast upward direction, then use not the OP but maybe XOP target to the upside and watch what will happen. So, but as I said, technical picture looks mostly bearish, and we should keep an eye on a possible chance to go short.